Welcome, everyone. Today, we are going to talk about this turnkey Midwest housing market of market listings. And it's a company I worked with several years, myself and my members. We have done very well. The returns are above expectations, and you're going to learn why. My name is Seewing Yee from the Yee Business Network, and my co-presenter is Caleb Canazzi. How are you, Caleb?
I'm good. How are you, Seewing?
Very good. Caleb is part of a real amazing family business. They've been in the business for so long, in upstate New York, Buffalo, Niagara Falls, and they have a great operation. We can go over that. We can dive deep into their process, their system, their procedures, and we can go over some off-market listings, very high cash flow. We can also dispel a lot of myth about this market, which will surprise you. At the end of this Zoom, if you guys out there watching, you will see any kind of value whatsoever from this video, please like and subscribe to my YouTube channel. Also subscribe to my email below this video to become our member of our real estate investing community. So you can receive weekly email about out of state long distance investing turn so you can achieve your real estate wealth. All right. Without further ado, Caleb Canazzi, thank you so much. Let me share my screen and go over some slides. Let's go along. And today is the January 2024. To validate this market, don't take my word for it, all right? Go through your research and due diligence. We have some great collaborated evidence out there. Zillow has created a top 10 housing market 2024. And quite surprising to a lot of people, but not necessarily to me or not necessarily to Caleb and his turnkey company in Buffalo, New York. Isn't this amazing? Buffalo is ranked number 1 in the top 10 housing markets, according to Zillow, right? And how they measure it, the Zillow, they measure typical home value, the average mortgage payment, the typical rent, and average number of days a house is on the market for these listings. And furthermore, Redfin, which is a very popular resource for a lot of people out there, a few months back, they created an article. They say homes in upstate New York sells roughly within a week. And they target upstate New York, Albany, Rochester, Buffalo, are among the nation's fastest housing market. Go figure. With that said, so one more thing, couple more things, then I'll help you. I'm going to ask you for your opinion. Redfin also said this realtor in Rochester, New York says, because of the cost of homes are so low in upstate New York, it's a no-brainer because as we all know, the last 2 years, we have seen skyrocketing home prices all across the nation. And we have a 40-year low affordability crisis out there. So homes are in many areas of the country affordable, but not in Buffalo, New York. And they were saying Buffalo, New York is a very affordable city for years. They have so much to offer. They have a cheaper labor. The local economy is changing for the better. Housing prices and general cost of living are catching up to other part of the country, this realtor said. And also Buffalo, Niagara Falls, it has a housing shortage because people cannot afford to move to other areas. And homes that are listed in the Buffalo, Niagara Falls are starting to be very, very robust for not only for owner-occupied buyers, but for investors as well. So with that said, Caleb, can you provide your opinions as to this third-party verification about the robust Buffalo upstate housing market?
Yeah, it's that article from Zillow has gotten a lot of attention, just locally at least, where people are. It's surprising, not surprising, really, because it's surprising that we finally get attention from other places outside places. Because Buffalo, it's not like the biggest city; it's the second largest in New York State, but it's not like a massive city. This is like in the city, it's only a couple 100,000 people, but it's finally getting some recognition for being just very affordable. Houses here compared to the national average are more than $100,000 cheaper. If you check out the list that we send out, you see these housing prices and you're just like, wow, how can you sell a house for that? Because you certainly can't build one for that kind of price, even though labor here, as that older article, is cheaper than a lot of places. And that's the allure for a lot of people now and businesses in particular, is because if you live in New York City, you got to pay your employees a very good wage just for them to afford basic living there. you could get a small condo apartment for like 1,500 a month. Whereas 1,500 a month here, you could actually rent an entire house. The average rent here is closer to like 1,250 for a property. So it's just super affordable that companies are now able to just move in here, like Geico or something, especially these companies that they don't need in-person people. A lot of companies have switched from the pandemic to be remote. So those remote workers, they're hiring in Buffalo because you don't need to pay someone as much as if they live in LA doing the same exact job just to be able to afford just basic living standards. You need to pay them maybe 30% more or something like that. So that now a lot of companies see that, and the state is giving incentives now for Buffalo too. Chuck Schumer just a couple months ago, I think it was in October, mentioned how Buffalo is going to, not just Buffalo, it's Buffalo and surrounding areas, Western New York, are going to be getting billions of dollars from the Chips and Science Act. So they're investing in Buffalo to become a tech center, essentially, for manufacturing these chips as well and competing with like China, in other words. And that's just because, largely, in fact, because we have low, you don't have to pay people as much because the standard, the living costs are much, much lower here than other places. And we have a very educated population still too. There are very good SUNY universities here, like the University of Buffalo, Buff State, that we have a very high educated population, and the cost of living is just very nice, so that people are giving Buffalo a lot more attention and realizing it's a nice city to live in. There's not that much traffic. We have a lot of the benefits of bigger cities, but we don't have a lot of those negative effects either. Even the Buffalo Bills, as we were talking about before, like they're doing well. So the city of Buffalo right now is on a very high streak where people in Buffalo are happy right now. Good to be a Buffalonian.
Yeah, that's right. Yeah, I'm a football fan, and I follow Buffalo Bills for many decades, by the way. And but I love the Buffalo Bills. Josh Allen is an amazing quarterback. So yeah, but yeah, this Buffalo's more than the football team. It's an up and coming market. What are you saying, Caleb, is that the economy is growing, companies are moving in due to the low cost of labor. The companies coming in a high profit margin because they don't have to pay someone that much money had they not be coming here. So as a result, in the past, my takeaway from what you just said, in the past, a lot of people grew up, the locals grew up in the Buffalo area, upstate New York, whereas in the past, they might be wanting to leave New York to go to other places to have a life. But now, because of the home affordability crisis, a lot of the local in Buffalo decided to stay in Buffalo because they could afford to buy a home. They could afford the jobs coming in. So things are all looking good for the future in the upstate New York, Buffalo, Niagara Falls. Is that my takeaway? Is that
Yeah, Buffalo is great. And especially my dad, he even talks about a lot too, about the city, of how much it's just changed over the past 10 years to be, or 10, 20 years, just to be much better, cleaner city. And the people, Buffalo is also known as, the nickname is the city of good neighbors. And there's a lot written about that, of how like people in Buffalo are pretty, like you go to New York City or something, and a lot of people are jerks. I'm not, but Buffalo, the atmosphere here, I love it. I like Buffalo, like, and I think people are finally recognizing that as well nationwide, because people in Buffalo, especially up and coming, so it's not really that surprise. It's the surprise that kind of that people now a little bit more nationally, like from Zillow and Redfin and Realtor.com or all those other sites, like recognizing, hey, Buffalo's got something going on here. Like the market's going to do well because people are starting to recognize it.
Oh, no doubt about it. And again, you guys run a Buffalo turnkey business. You guys run a turnkey investment real estate business for several decades. Your father created your company many decades ago. And as children, as siblings, you and your siblings are running this mom and pop family business. And you guys providing so much outstanding service out of state investors from, let me guess, your investors for the past several decades your investors buying your off-market turnkey properties. They're coming from across the border from like from Canada.
Yeah.
It's a hop and skip and a jump. They come over and buy up all your rental properties, and people from overseas, so from the Middle East coming to your market, from Europe and wherever other places from across the country. Of course, most of my investors come from live in California, so I've been encouraging them for the past several years, working with your network, buy out of state turnkey properties through your network, and other people, other investors from other part of the country have been consistently buying, especially when they have a good experience, buy the rental property through your network and they have a good experience, they could buy more, right? Very obvious because your property, we can go over your spreadsheet momentarily, briefly, but there's so much room to grow because knowing that your market, as I understand, is growing. You have a low supply of inventory, just like a lot part of the country, low supply of inventory, more higher and higher demand, the influx of migration of people coming into upstate New York based on what you just said with the job companies moving in and what have you, because the benchmark price point of your housing prices are so low, there has a lot of room to grow, meaning there's a lot of potential appreciation long term based on this low supply and pent up demand of buyers, owner occupied buyers, and out of state investors as well. So does that sound about right? What I just said?
Yeah. Yeah. Especially, and a lot of people, we get people from all over the world investing in the United States. And in a lot of countries, there's instability. So people want to eat with housing and also with their currency, essentially. So people want to invest in the United States because it's known for being stable.
Yeah.
And if you're buying properties from other countries too, a lot of these people are buying them completely cash too, even. Coming to Buffalo specifically because the housing price here, you can buy houses, like people can buy houses for cash here, whereas in other markets, if you're looking at $400,000 house, like buying that cash is not as easy for as many people to do as, for instance, $100,000 house here. So it makes it very attractive to a lot of foreign investors as well now.
Yeah, that's right. The foreign investors, you guys are quote and quote safe haven, safe paid investing, right?
Yeah, pretty much. Especially like we get a lot of Israeli investors too, and they're picking up more now too because of obviously everything that's going on in Israel. That people don't want to keep their money in Israel as much. They want to move it out to an area that they feel is a lot more secure and historically been very solid.
Yeah.
Buffalo is a very excellent choice for them.
Yeah, your company has created so much track record over the years, and you get repeat buyers from Israel. What
Oh
other?
yeah, I just got an email today too about someone who CC'd another one of their friends in, just saying, "Hey, check out these properties." I've done really like he literally uh, like wrote up a thing about how well he's done here, and if you want basically, hey, check out the property list, and I sent him our list
Yeah,
today. Yeah.
no surprise at all. My network have been working with your company for several years now, and it's just you guys have done very well. We can go over the inventory listing very momentarily, but we have to assume that the foreign buyers, because the average price of an off listing property you guys are promoting like 60 to 100 grand, from a single family home to a duplex, for a triplex and fourplex, like 150 to 200 grand. These foreigners are buying all cash. They buying two or three of your houses at one time from an individual foreign investor. Let me guess, from the other part of the U.S. Okay, Canada very closely. You have Canadian buyers coming across the pond, across the Niagara Falls. It's not only like 1 hour away. Canada they've been consistently buying your houses for many years and without cash. Let me guess, the honest investors that you work with, not just our mostly California investors, either they buying all cash, or they could buy with the self-directed IRA, all cash with the IRA similarly. And because your product appraises so well, many of our investors are financing. Imagine we're able to finance a $60,000 single family home through your market, through your listing with 20 to 25% down payment. The total out of pocket for single family home is like less than 20 grand out of pocket. And they get an income producing asset, which is performing so quite well. Hold on. So let me share my screen and just continue with my PowerPoint. I took the liberty of creating this. One more thing here. One more thing here. It shows that Redfin shows how the Buffalo market has been selling very quickly compared to the other market in the country. And then I took a screenshot of your last week listing, the Buffalo and Niagara Falls listings. Now, what I've noticed, now everyone out there, if you're watching this video for the first time, if you watch my YouTube channel for the first time, this is the off-market listing. This is not the multiple listing service. So this portfolio that are owned by your company, and you are opening up this opportunity for investors from our state. So this, and although some of those listings are here are for local owner occupied buyers. Again, this spreadsheet is so hard to see. We're not going to go over details of these listings, but what I noticed so far, as I get a weekly listing from you of these off-market investment opportunities for investors, what I noticed lately in the environment where today's housing market, where the supply of inventory is a historical all-time low, right? Because of the lock-in effect and made other reasons, there's almost no inventory to buy all across the U.S. Today's housing environment, and the pent-up demand is getting higher and higher because of the mortgage rate are projected to continue to go down as we move forward in the 2024 and beyond. I'm looking at your listings compared to your listings a few months ago or a year ago. I noticed that, which is very surprising, very good, that on this listing, you have like 50 total properties in Niagara Falls, and then another around 50 listings of homes for sale, not for sale, but available at various stages in Niagara Falls also. So how do you explain your internal operation? Why all of a sudden you're able to have more houses available for investors to buy currently, although some of those probably are under ready category, as you can see, under type, no, not under type, under status. Yeah, under status, you have the ready category being means they are ready, they are available to buy. Then you have certain houses that are under contract, which is self-explanatory. Then you have another category of property or under future category means that the properties are going through a various stages of rehab by your internal rehab team. And within a few weeks or few months, those future category of homes will be changed to ready status for investors to purchase. And of course, there are small percentage of the homes on this spreadsheet that are only for owner occupied buyers in the local market, and they are stated clearly on the right-hand side. So with that in mind, my curiosity is such that, which is very good, Yama, why all of a sudden you guys have more houses to sell? Inquiring mind wants to know.
Yeah, sure. A few things to note though. So on the sheet, so there might be, say, 100 houses. I don't know exactly how many, but there are only, say, 20, 25 of those are going to be actually for sale, like where you could put it under contract today, more or less. Most of those are either going to be one under contract already with someone else in the set, or they might be listed as future, meaning that they'll be ready at some point in the future. And typically that's because we're doing some work to them, and it varies on the work that we do to the property. You can always inquire and find out, and we're very open whatever you do to the property. So the reason we just got a bit more is because we recently bought 2 big packages of properties, package of 10 and a property package of 14 properties. Right there is 24 properties. So we got an extra chunk of properties right there for why we have a little bit more. A lot of those are future though. So it's not like you just put them under contract today, more or less. But yeah, we're experts at finding properties that are good deals though. So we do all these auctions, and we really try to just buy any property that we feel is a good deal. We don't want to turn away good deals, in other words. So we're able to locate those and then we'll put them on our sheet. So the one thing you mentioned, fully correct, is you said those ones that listed are to homeowners are only for homeowners. So investors can buy them alike. It just doesn't make sense typically from an investment standpoint, because your return on investment is going to be less. So typically investment properties, you want a higher return on investment, whereas the homeowners don't typically care. They just want a nice property in a nice area. So that's why we sell them to homeowners. So those were typically listed. So homeowner properties typically listing on the MLS in order to just, because they're going to be paying a lot more than what investors would be pay for those properties. You're free to buy them, but it just doesn't make as much sense. It makes more sense if you're going to live in them.
Yeah, is that what are you saying is that the homeowner category of listed on your spreadsheet, they are more expensive. They do not cash flow as much in terms of cash and cash return, rent to value ratio, the cap rate, and the whole nine.
Yeah, homeowners are willing to pay more money. So a lot of actually what we found a little bit, because we try to do with ease of business. We try to deal in volume, so we don't need to make as much on each property. It's more like we're trying to get like a quick turn so that we deal really in volume. So for the homeowner properties, those are just one-off sales, so they're sold for more. Whereas a lot of the like investment properties, we're doing repeat business. We deal a lot in word of mouth, like I said before. Like a lot of just it'll be friends or brothers, or like you just tell a cousin, or I don't know, whatever. It's like people, we can get our list out that way. So we have avenues for.
Yeah. So Caleb, of course, my network is working with you, our investors been purchasing in your market, in your listings for a while now, and are they very happy? So I know that I'm asking you these questions in case somebody out there watching this video may not know you. I want you being very honest, very transparent. Your answers, which right? Because you guys been around for so long. Now let's pros and cons. Over the years, you hear, the misconception is such that, for Californians or people from that live in high price areas like in California or from the Northeast, New York City or Boston or Chicago or some high price area, they can't cash flow in the local market, so they come out of state. So the one misconception is, don't buy those cheap properties, don't dilapidated old properties, because on paper they cash flow very well, but those out of state Midwest properties, they're older property, they have a lot of maintenance, there are tenant issues, and it's ghetto world misconception. Yes, that's true. If an out of state investor go to a wrong market, they surround themselves with a wrong turnkey provider, and worse yet, if they want to come to the Midwest, and actually up to New York, because you guys are located in the western part of the New York state, you guys, in my opinion, you guys are the typical Midwest market type investment market, because if you look at the map, Buffalo and Niagara Falls is only a few hundred miles from Cleveland, Ohio to the west. So you guys are part of the Midwest type of investment methodology. So again, there's a lot of misconception, but Turnkey, people think, Turnkey, you don't get the better deals because they're turnkey provider, create a high margin, profit margin for themselves. As an investor buying retail, you're not going to get the best deals. You need to ask investors from California, from wherever, they want to buy in the high capital market. They have to go through the multiple listing servers. You have to make the local offer. You have to find a distressed property and make a stupid offer, 50% discount from the multiple listing service. And then better yet, don't hire a property manager. Manage the property yourself so it can save money on a property management fee. Or you need to self-manage so you could capture more returns on your Midwest, so forth and so on. Okay. So
sorry.
Yeah, it's okay. Those are misconceptions. So what makes your turnkey product, the way you do it over the years, provide better value to out-of-state investors, whereby provide better return, even though you use a turnkey approach, property management, the whole 9 yards. And so how do you do an apple to apple comparison based on what I just said?
Yeah, so there's a lot there. So I'll break it down a little bit from that point. So you mentioned people buying dilapidated property and then fixing it up and doing that themselves, which is absolutely a thing that you can do. It's not as easy as people like to think, though. So we've been doing it like a lot of years, so we know what we're doing. But there are investors who I know pay way too much for properties that they think they're getting a good deal, and then they underestimate rehab costs. It ends up just being a nightmare and a lot of work. People do make out from that. I mean, that is what we do, but we provide that service for people so that it's more hands off kind of service there. And with the management company, it's more like a passive investment that way. People do manage their own properties too. And that turns out really well. It's just depends on what kind of investment you're looking for. But one thing, yeah, I would warn with the buying off of MLS on a lot of these properties is we don't even do that ourselves. Typically, if you look at the properties that we're selling, they're not MLS property. We're not listed. We go through other avenues to find good deals. On the MLS, we buy very little that we do. Like I can't even think of a property that we have right now was on MLS. We've done it because every once in a while we're professionals. We're looking at this all the time. But unless you really have that expertise, really know what you're doing there, it's very difficult. Especially we have all the avenues for rehabbing the property. A lot of contractors, unfortunately, are pretty unscrupulous and they'll overcharge you. And it's not as easy as you think. You get general contractors too for this, and then the general contractors making money off of you too to manage your whole project, or you're going to have to basically manage every little thing where you're hiring an electrician for this, a plumber for that, the drywall people for this, kitchen guy for that. And it's just, you can go that route and make money for sure. There's no doubt about it. It's just, if you're just a normal out of state investor, it's just like a warning label right there that it could end up disastrous. But with these properties, since we know what we're doing and then we're able to help guide people and then make it just really passive and easy on investors that way. Was that the main question there?
I
It's a
mean,
little,
yeah,
little long.
I know your process, Caleb, right? We've been working together for a number of years, but I just want the people watching my videos for the first time, I'm going to dispel any misconceptions. I want to do apple to apple comparison. But I don't know whether you look at other websites on the gurus out there, or I'm sure you heard of bigger pockets, right? Bigger.
Yeah. I went to a couple, they have local meetings here. So I've gone to a couple of those
Yeah,
with me.
bigger pocket and other very large real estate gurus that promote a lot of things in YouTube channels. Sometimes they invite testimonials into their YouTube video, and talk about their experience buying properties. But I'm not picking on bigger pockets per se. They provide a lot of great education. They one of the largest real estate website out there, right? And they always promote, you investors don't go in turnkey providers. You buy your own deals. You offer property on a multiple listing service. You make 1,000 offers every single month. You would lowball offer. You try to get 50% discount. You try to buy distressed properties. Then after you buy the offer, after you get a 50% discount on a particular deal or wherever it's in the Midwest market, right? I'm talking about mainly the Midwest area, and they're going to say, then we have property after you get a huge discount, fix the property up yourself, then self-manage your property so you can capture all the returns. But it sounds too good, sounds good, but it's not that simple, like you said, and not everyone can do that, especially from out of state in California, wherever you live. You can't do all this actual work on your own, right? You do an apple to apple comparison. You guys, on behalf of investors out there, you go to the local market every single day. You've been around your market for several decades. You know every neighborhood, every street corner. You know what neighborhood to buy. You know how to find those distressed property. You guys offer a very low discount. You buy those property in bulk with your money or cash. Then you use your own rehab team to rehab the property, and you get a huge discount of construction materials, the local Home Depot, which you have a very long term, decade long with relationship with the local Home Depot. So you get discounted savings from rehabs. You guys rehab the property legitimately. And then when you make the properties turnkey rent ready for our investors, even the list price, it is what it is. I still consider the list price that we buy is not retail. I still think it's a deal. It's a great deal because most likely we buy at a under market value still, even though we buy off listing from your spreadsheet and what have you. So my estimation, knowing what you guys do, apple to apple comparison, I use your turnkey approach better than investors out there doing it themselves, self-managing, self-doing things as promoted by many real estate gurus, not just bigger pockets. What are your quick thoughts based on what I just said?
Yeah. So basically, what you're saying about going and taking like a bunch of offers and going around looking at like you can't do that. But if you have a full time job and you want a passive income, that's not feasible at all. Like we do between my siblings and I and a bunch of people that we work with to put these properties together. Like it's a full time job for sure. If you're looking to do that, so if you're already a professional, it's I think it's best to stay in your own profession and then get these turnkey providers for that. That would be more or less my thought. And it's better to buy basically directly from us than like investing in these like REITs or anything. Cause we actually have a guy from a New York City fund coming in and he's basically telling us he wants to buy for his fund that people and other investors invest in like 5 properties and they're making money for that. You might as well come directly to the source. So it's funny like what people do, but I do think we have a very excellent product, and that's why we have a great reputation throughout the years. There are of course risks involved with anything that you invest in, but I think it's absolutely worth what we're paying, what people are paying, and we're not trying to rip anyone off. It's just we build businesses. So maybe other turnkey providers, maybe that's like something you do need to warn against. Cause I do know like I have heard like horror stories from like other cities. I've not heard of anyone bad in Buffalo. There probably are. I don't know of them. I've heard bad things, but as far as our product, I stand by it. But if people are looking to buy completely dilapidated properties themselves, it's pretty tough. It's not like those shows where like a lot of people see like that, like Flip This House or like the Property Brothers or something.
Yeah.
And they're like, oh, this is it's easier said than done, and it's a TV show. Like, and we're those guys are making huge margins on these houses. We're dealing more in volume where we don't we make money, and it depends on the property. I don't know, but it's not like our market is not like those shows.
Wow.
It's very different.
Yeah, there's a reality and there are misconceptions. There's the myth,
Yeah.
MITH versus reality. Sometimes my pronunciation is not 100%. I understand.
Yeah.
Myth versus reality. I'm really glad you're being so transparent. Let me share my screen. Let's continue. So again, the one thing about your market, your off-market listings, you guys target or cater to out-of-state turnkey investors who are very busy professionals working full-time job. They have no time to manage their own property. They rather delegate and outsource all their time and effort to you guys because you have guys about turnkey, everything, one-stop shop under one umbrella. You guys been doing it for more than 30 years. Your father run the company from the beginning and you guys are his family business and my investors come over to visit your properties. You guys are so accommodating and take care of them, to show them around all their neighborhoods and everything else. And so you guys are provide outstanding service above and beyond having some great properties. Again, we're not going to go over all these listings in Buffalo and Niagara Falls, but I'm going to highlight a couple of properties, which is absolutely amazing. Yeah, this return on paper looks good, but it's beyond on paper. Okay, you guys won't truly or the most legitimate turnkey property in the Midwest or anywhere else in the country for that matter. Now, we're not going to go over too many things, but a single family home typically sells from 60,000, 70,000. It rents for like 850, good cap rate, 7% cap rate. And 10% cash on cash returns. And you guys have some duplex for like some 80,000, 100,000. You guys have triplexes all over the place. I'm not going to go over the numbers, but this is amazing numbers. Is beyond the numbers. But look, you guys have like here, this is a four hooker. Get fourplex right here for 173K, which I created a pro forma. We can go over that momentarily. You have a triplex for 156K, rents for 1845, and the opportunities goes on and on. You guys have a rent to value ratio of way on 1%. The 1% rule, you guys blow the 1% rule out of the water. 1% rule, the 1% of the purchase price should equal your gross rent. But you do the numbers. People do the numbers when they look at your spreadsheet, you're getting way more than 1% rule. We're not going to cover that. So we have a robust, your cycle of properties. Once the rehab property are finished, you convert into a ready property. The future property is being rehabbed, like you said. So we're not going to go through the spreadsheet, which is amazing. You have so much opportunities. Yeah. And okay, let's look at a couple of performers, then we'll conclude very shortly. We cover so many things. So this is our current listing. It may have been sold, already been sold, I don't know. But this is a typical single family home listing in your spreadsheet. Look at this, 67,000 only market price. It's all we have. We rented mostly on a month-to-month lease. You look at the gross rent, 825. You look at the metrics, and we never go over the rent value ratio is above benchmark, capitalization rate, cash and cash return, all very robust. And you minus gross rent minus the debt service, as you can see down here, the debt month expenses, debt service. You have a monthly net cash flow of about $143, or at least on the first year annual cash flow. But it's much more than cash flow, right? When you buy income property, Caleb, you and I know that, right? It's a long-term buy and hold. Investors get paid multiple ways: cash flow, appreciation, tax benefits, loan amortization by the renter, the whole 9 yards. All right. So don't just focus on cash flow, because your market over the past few years, including the pandemic, have achieved pretty good appreciation, right? People are going to be very surprised how much the value of your homes have increased in the past few years. Of course, past performance is not a guarantee for future return, right? No one have a crystal ball. But so this is a single family home. Then so you guys have even a beginning investors out there, even a newbie, when they come to your market, when they use this turnkey approach, they don't need to learn too much more, because you guys provide the turnkey approach. Because if an experienced investor or a newbie can buy single family home rental, a duplex, triplex, and fourplex in your market, in your listing. So let's go over the duplex that are currently under for sale. I even put down the address. Look, duplex for 117K, both doors are rented 1,800, which is $900 per door per tenant. Then a 25% down payment, even with a 7% mortgage rate or even higher for investment mortgage rate. At the end of the day, with 25% down payment, which is only 35 grand total out of pocket on a financing deal, you're getting a monthly net cash flow of a whopping $736, right? On this very turnkey rented duplex all we have. And then finally, this fourplex, which is listed on the spreadsheet for this week, for 100. This is amazing. This is too good to be true. Okay, you and I know it's not too good to be true. For people watching our video for the first time, they thinking it is too good to be true, but whatever, right? 173K, fourplex, all we have, all rented, all four doors, 2320, all four doors, around $600 per door, gross rent, minus 25% down payment, the whole 9 yards, monthly net cash flow, at least the first year, is close to $800. And then, and so what else I need to mention? And so again, how many market anywhere out in the country where an investor, whether they are experienced or whether they are newbie, that can quickly buy a combination of single family home in the market, duplex, triplex, fourplex, and they don't need to pay a losing guru $50,000 upfront coaching fee just to learn more about multi-unit investing. They can investor, regardless of experience, because I'm a mentoring coach myself. So I love coaching. Sometimes, most of the time, fee based, sometimes not. And people can quickly accelerate their learning curve by coming to your market, buying 1 to 4 units, just like that. Small multi-units have favorable 30-year fixed rate mortgage loans and leverage their way into a multi-generational wealth buying your market and also getting the long-term return, investment return 4 different ways, not just cash flow, right? You and I know that. Appreciation, equity growth, cash flow, loan debt paid down by the tenant paying all your debt service, and then amazing tax benefit, which we can talk about on this video. So somebody buy a whole, create and scale their portfolio, use your internal property management to manage multiple property they can buy in your market, whereby I believe my investors told me that, right? Some of my investors bought 5 or 10 properties from or more from your network over the years. And when I ask them, by the way, Mr. Client, how many hours you spent managing your 5 to 10 real estate portfolio properties, 1 to 4 unit from Buffalo Turnkey? You know what they tell me? How many hours they spent per month managing?
Not many.
They would say, and I'm being honest, couple of hours per month they spend managing, scaling their portfolio from your listings, from your type of investment methodology. So when I say that, why can you, based on your opinion, why they have 5 or 10 property to purchase from your network? Our investors and other investors too, across the US, when they bought from you, why don't they only need to spend a couple of hours per month, not per day, not per week, per month in managing, quote unquote, managing their risk portfolio? What's your take on that?
Basically, it gets managed by the management company. And these investors, they're free to shop around and look for any management. Once you own the property, you could do whatever you want. And going back to actually what you said before, some people do manage their own properties too. If they're typically when they're local, not really out of state. But you could shop around and look for other property management companies too. That's not an issue at all. But as far as for management, it gets handled with the property management agreements. But normally those are just like questions that you might ask. You get a statement every month from the management company. It's typically an Excel spreadsheet that details the income and expenses, but you just might have questions on it. So you might just call up and ask a couple questions. But as far as the day-to-day management, our management company basically strives to just make it as hands-off for the clients as possible, so that you're not spending like a ton of time. You basically just check out your property management statement, see the proceeds, and just get directly deposited in your account or ACH or like however you want to get your money. Check, and we make it easy. Yeah,
That's the idea, Caleb. One final question. Okay, one final question. I know we spend more time than necessary.
no, good. I love talking about real estate.
Yeah.
And anyone could call me too. Like, I think you put my number on I'm happy to talk to anyone anytime.
Exactly. So one final question, which is a very important question. Let's talk about the quality of the tenant. How often they live in the property. Well, I'll talk about the maintenance issues because your property are quite old. I know you guys rehab your properties over and over again for decades. But the challenge is you guys are selling much older property than normal. You guys in your market, like a C plus B minus category, or the way I call it in terms of maintenance, overtime maintenance. I know you guys done a full rehab and our investors, they do a inspection report probably before they close escrow. So make sure all the major things that yes, electrical and the furnace and the roof, everything has been rehabbed recently or currently or whatever. Go with the challenges of buying older properties, the overtime, the maintenance issues, the vacancy situations associated with your tenants, the quality of the tenant, and the neighborhood you guys target that make it a less risk for our investors. So go over that scenario.
Yeah. So one thing just to mention up front there, for all the properties, not every single one has undergone like heavy like rehab or anything. So some of these properties we do very little to, since when we purchase them, they don't need very much. We do basically what we feel needs to be done. It will depend on the property and the price will reflect on that. So if the best way to figure out how the property is, it would be and I always suggest getting a property inspection for out of state people because like we'll miss some things on the rehab too, like what they might miss like a hand railing or something very simple like that, and we'll just go ahead and do it. We're not going to do for us to do something as simple as that is really easy because we have the guys are already out there to do it. So we're happy to just take care of those sort of things. As far as like major, bigger ticket items, so say the house you're buying is built in like the 1950s or 1940s or something like that, they're like 80 or 100 years old or something like that. For those properties, they used to build these houses like you wouldn't believe. They're structurally very sound, and you can have like anyone go through. Like the property inspector will tell you, absolutely, that's like one of the biggest things you got to look for is that the house is structurally sound. And we're not selling houses that are not structurally sound. So as far as the house goes, so the roofs typically last around 25 to 30 years. Like an architectural shingle will last that long. So in that time, these roofs have been replaced maybe 3 or 4 times already. So it's not like you're just thinking like, oh, this roof is super old. It's probably within the past 10 years, or maybe we even just did it this year. Like we bought the house in a dilapidated state and we needed to put a roof on it. We're happy we factor that in and we do it. So when you get a property inspection, say if you think the hot water tank or furnaces are a little bit older, we can replace these pretty easily. It's not really, we're not just like a normal seller where these issues are like a big deal. To us, it's really not. So the property inspection is super valuable, especially because they're going to vary on rehab. So somehow they're basically almost like brand new. Where we're doing kitchens, baths, the roofs, the siding. We're doing some framing. You're doing the floors. That like you're doing drywall. You're doing the electric. Like you're doing everything. The plumbing. And then somehow is they're already in like excellent shape and they don't need anything and they last a very long time. Now down the road, if you buy a new build or something for way more money, a new build is going to cost you just to build a standard house like that. It's going to be 250 to 300,000, like for a normal size house. Those are going to go too. Nothing lasts forever. The structure should be very sturdy, and they're not going to, you shouldn't have issues with that. Those are not good. But as far as the builders go, that's what you're doing to the property. So it really depends on the property. And again, that inspection report is going to be invaluable too. And before you even go about that, you could ask it. Like we're very open to tell you, like, hey, what we did to the property or what it needs or what kind of condition it's in. We might say, oh, this one's kind of just decent condition. It has long-term tenants. We haven't really put like like when the tenant moves out, it's going to be new carpets, paint. And that's why we're selling for a little bit less of a price. Or there might be other properties. Like I sold with a guy. This guy just loves doing this. He buys properties that we haven't done a lot of work to. He holds them basically until the tenant moves. So sometimes these tenants stay forever and he just holds on to the property, but he holds them and then the tenant moves. So then he does a rehab to the property. And then once it's freshly like rehabbed, he sells them on the market for a lot more to homeowners essentially. Cause then you got everything brand new. Like he's basically like flipping it, but like he's holding on to it until the tenant moves. So it's like he loves doing that. And like he just did another one, just like close maybe a week or two. Yeah. There's various things. The best way I'd say is just to just talk to me. Like I'm happy to email me, like call me. Like I'll let you know the lowdown. Like say you're interested in this house. I typically know what's going on at the house. So it's so hard to generalize. There's so many properties. It's hard for me to say, oh, this is like on a short Zoom call like this. But if you got a specific house, like we could go over.
Of course, yeah. Caleb, you and I know that, right? I know that you know that, but I just want you to articulate and explain.
And it's not
cool. So yeah, your answers are always meet my expectations. So in terms of we only have 2 more minutes left. So you don't have to say it, but your tenants, for the most part, are very good, hardworking, blue collar tenant that normally stays pretty long. And if you have a vacancy, or what, for whatever reason, you guys will go in there and fix up the property, get a renter. So your team does all the work. So am I to hear? Am I to take it that the the long-term vacancy issues, quality of the tenant, the location of properties should not be a red flag for investors, because you have done most of the due diligence where you could address all these kind of factors. Is that
Yeah. Yeah, typically. So basically, if we think a roof is going to go in like 5 years now, it's going to either replace, we'll just go ahead and replace it. Basically, it's how it goes by the life index. But say the roof we think is good for 10, 15 years, we're typically not replacing it, because why would you? We could sell it basically it's going to be a lot to price, just because we know, like, hey, 15 years from now, you're going to have that expense. And we can handle that for you as well. And then as far as maintenance goes, the properties, they should be all turnkey, where you're not going to have these huge maintenance things off the bat. We try to make it so that you're pretty solid and good on that. As far as the tenancy, it depends on the property and the tenants. So some of these, there are like Section 8 leases. We'll rent a real assistance corporation or Belmont or something like that. So that's typically 10 or 15% of the properties have that some sort of assistance, or DSL, like Department of Social Services or something. So they're not like all working tenants, but a lot of tenants are working tenants. And when we rent the tenants, we typically want to see that we do a pretty thorough job on when we're renting to tenants, like checking the background, we're checking references, checking pay stub, making sure that they have at least like 3 to 4 times. They're making 3 to 4 times a month for the rent amount. So we're doing a pretty thorough job when we rent that. Sometimes when we buy property, there's already tenants in it there, though. So you inherit those tenants, but a lot of those tenants are really long-term tenants too, where they've been there for like 5 years already and they have no intention to leave. And they already have like a good schedule where they're paying on time. So sometimes it's that they do pay a little bit later in the month, but they're always like hedging up. It really depends on the property. But for instance, if there's like a tenant that's not paying or something, that we purchased the property, and that's one of the reasons why the seller was selling, because they don't want to deal with the tenants, we might put it on the sheet to list it as future. We'll do the eviction, then we'll do the rehab, get it ready. And then after everything's all ready and set, then sell it like turnkey.
Yep, Caleb, it is my intention to do a long video because we have so many great things to cover, and we have covered a lot of great things in very detailed. Really appreciate your time. So my takeaway, my recap from this video from a high level is that the bustle market to me, is an under the radar market. The mainstream media are not aware of what's going on, at least not just yet, other than the Zillow information and Redfin. So it's a robust market, it's up and coming. Lot of migration patterns of people coming into your market, and the prices are very low. So there's a upward potential for price appreciation. Although we don't know, I don't have a crystal ball. You don't have a crystal ball, but these are trending. All the data, all the metrics are trending very positively long term to the Buffalo and Apple market. It's a still very low price market, very high cash flow, but uh, much more cash flow than many other Midwest markets. And so additionally, finally, my takeaway is such that is that the price is so low for investor, the cost of entry, the down payment on the financing is very low. You got the bang for the buck. And finally, most importantly, for policy investors that are investing in your market 2,000, 3,000 miles away, like our investors in California, is such that it's a turnkey. You must try. People need to find a trusted team out there that can do all the maintenance, all the managing of the property long term. And so you'll have a team available in your area to take care of everything, whereby investors, whether they buy one rental property from your network or 10 or 15 or 20, they don't really need to spend any kind of extra time and effort to so-called manage their property. So long-term buy and hold, good market, the returns are good, and people can scale your portfolio systematically, consistently. is very robust. So the risk is very low. People need to do research and due diligence before they pull the trigger. But given the system, process, and procedures in place, your buffer turnkey market, it will mitigate a lot of the perceived risk associated with buying in your market. So that's my takeaway. What is your quick takeaway before we will finish with this long video? What's your takeaway on this? Caleb?
Yeah, you said it. Something up there. So the affordability in Buffalo, it's just really good. And that's just really helping allure a lot of investors. Like that kind of one of the best things, especially the cash flow. You're not getting cash flow like in Buffalo or in other markets. And then you also, on top of that, historically have gotten a lot of appreciation for the past appreciation. Doesn't mean it'll continue to go, but it seems like it will. I think it will. A lot of people do. It's really just hard to say and for sure, but either way, you're getting that cash flow, unlike in other markets. So you get the best of both worlds a little bit with this Buffalo market. I think it's a good investment.
Absolutely. Caleb Canazzi from Buffalo Turnkey, and your contact information will be at the bottom of my description for those people watching this video. If they want to contact you, of course, they need to contact me, preferably first, so I can do some high-level consulting with a particular investor, make sure they qualify, make sure they get their financing through resources and what have you. At the end of the day, you guys watching this video, see any kind of value from this video, please like and subscribe to my YouTube channel, and also subscribe your email into my website linked below, so you become a investor insider with my network. So you'll be seeing in your email on a daily basis excellent real estate investment information free of charge. So you could continue to learn and ultimately take action either to potentially buy the Buffalo Turnkey property or the other properties and team that we have in other part of the country. Thank you so much, Caleb Canazzi, for giving your time, provide this amazing content. And my name is Seewing Yee, and thanks for watching. I will see you on the next video shortly. Have a nice day.
Thanks for having me on. All right. Bye, Theory.
Bye bye.